Hello and welcome to a beautiful Wednesday in the crypto world. Today I want to talk about a couple updates that are going on and primarily something interesting I found in the BitVM world. That's right, adding a virtual machine and progressing the computational abilities of the Bitcoin network. Maybe we actually get some sort of utility out of this thing. Let's dive in. So there's been a lot of conversations about this frontier stablecoin coming out of Wyoming. I've called it Front. Apparently it's being called Frontier. Took me a little while to figure that out. So maybe they should do a little work on their copy and their branding. But that being said, one interesting note that I did not realize could potentially set this thing just wildly apart. And let's remember, Wyoming has been working on some of the foundations of crypto banking. This is largely coming from Caitlin Long and Custodia Bank, which has been vying for a Fed registry or a Fed banking account, aka being able to connect to the Fed. But what they've been building is an over-collateralized bank that doesn't rehypothecate in the attempt to be able to interact between the federal system and the crypto world. Now, with the launch of the Front stablecoin, I mean, there is this one edge that is just pretty juicy, which is coming from the LayerZero CEO, Brian Pellegrino. He says, this is just like very clearly able to offer yield. So they built this system, this frontier, a yield bearing all the regulation around it to say, hey, we can offer this product. So if they do come out with a stablecoin that can offer yield, which is something that the Genius Act goes quite in depth about, well, I'll be curious how it pulls it off, and I will continue to dive in to keep you posted. But suffice it to say, that would give it an edge in this multi-billion-dollar market. It's about $240 billion of a market right now, but it is fragmented. There's stablecoins out the wazoo. This could be a major competitive advantage. We will stay in touch on that. Now, one thing I find fascinating, I recently reported how LayerZero was looking to acquire the Stargate bridge. Both LayerZero and Stargate are cross-chain bridges, and they were going to do a token merge, something that I've seen happen in the past, but they're not all that common, let alone amongst major projects. Like, both of these were pretty well funded, but we now have the Wormhole Foundation, Wormhole being another bridge, a mega bridge between Solana and other platforms like Aptos Sui, the Move ecosystem. And look, they're coming out saying, hey, at the Wormhole Foundation, we have respect for the Stargate protocol, its team, especially its holders. Stargate is a leader in a multi-chain asset transfers. That's why we're stepping up with our intent to acquire Stargate to ensure holders get the fair deal that they deserve. And it's pretty fun because really what's going on now is LayerZero, and let's remember, these are decentralized platforms. They have to go through a voting system, a system of democracy. So LayerZero and their foundation has basically proposed this token merge, which has a swap value, right? The tokens that exist have to become the acquiring token. And what that ratio is sort of up for grabs. They're saying, hey, look, LayerZero values STG at 110 million at the time of writing, holding 76 million plus in stables, 16 million in ETH and more. But this ignores Stargate's strong growth of the $4 billion of bridge volume. And they're saying they deserve better. So, and you can read this, I have it in the sources. But what is really cool here is that we now have two foundations dueling for the acquisition. And the way this duel is going to happen is going to be fairly out the open and transparent. That is because both teams need to vote via token holders, via the democratic process, what this valuation should be to make the proposal. This is why DAOs are aggressively slow moving and are really not the most efficient business vehicles, because they have this sort of open dialogue. And if we remember Constitution DAO, there was an open dialogue for how much they would pay for that constitution. So the winning bidder could just actually look at that and just bid, an extra $1 million on top. They would have to go through the whole democratic voting process. Anyway, that's why they lost the constitution and Constitution DAO. But we move on and we start to see this fascinating dynamic of these acquisition plays happening in the open. So really exciting to see. It's nice that Wormhole is coming in because now there's a competitive bid going on. And well, all the best for the Stargate token holders. At the end of the day, this means less bridges, this means less fragmentation, and of course, the better technology or the better business run products are going to be the ones that stand at the end. So this consolidation's pretty good for crypto. I know anytime we talk about centralization, we're like, but there is a place for it, and this could mean a boost in cross-chain bridging. Now, the topic I want to really dive into with a little more depth today is this awesome new idea around Glocks. Cool name, sounds like the weapon of the gun of choice in the United States, but really it stands for Garbled Locks on Bitcoin. And I know that sounds crazy, but for anyone that has a fairly recent memory, there was a big boon in the previous cycle. Maybe we even talk about like a year ago or so around Bitcoin L2s. Now, to me, one of the biggest problems about this is the bridging element. If you take Bitcoin and you bridge it over to a new layer like an L2, is it really still Bitcoin? And the answer is no. And Bitcoin has so much greater value in its original format. The second you wrap it, the second you add additional risk, protocol risk like a bridge, it does get less attractive. You don't want to risk losing your Bitcoin. That's just too high of a cost. So there's been a couple options around how this bridge works, but everything's operated with this centralized trust agent, whether it be code or an entity. And that is the thing that's continually trying to be solved. Now, David Soroy, who pumped out this great video kind of leading up to Glocks with a bit of a history around the current BitVM, the BitVM 2, some really fun information around zero knowledge proofs, which I've spoken before are going to be a massive unlock. But they have this really cool concept called the GLOCK. Now, the ultimate goal here is to figure out how to unlock computational processes utilizing Bitcoin. And like I said, we want the Bitcoin to stay on the Bitcoin layer, but still maybe we want leverage long capabilities. We want to use it as a risk on asset to make plays, to make bets, to generate more capital. Right now, the Bitcoin network really just secures Bitcoin itself, and it doesn't do much beyond that. But like we've seen with Ethereum, with Solana, I mean, people want to build applications. And one of the major problems so far is that basically a lot of the current L2s would say, hey, we're going to be on the EVM, on the Ethereum virtual machine, and we're going to lock your Bitcoin and we're going to mint a parallel asset. But again, there's a trust in there. There's risk being added to that Bitcoin. And like, are you willing to lose that Bitcoin to an exploit? So this is a great video for anyone that's curious. It is about 36 minutes, but I got to say, David is quite succinct, pun intended, if you watch it, in explaining their new idea for unlocking the value of Bitcoin in these computational worlds. And what it comes down to is the trade-offs. BitVM 1 had a permissionless network, but it took a lot of time in order to verify these ZK proofs. BitVM 2 took a little bit of centralization. They reduced the time, but they added a lot of fees because things were happening on chain. And their hopes are that this new GLOCK concept will expand the BitVM capabilities to be faster, cheaper, just, all around kind of more straightforward. Now, for anyone that wants to get into the depths of it, the GLOCK Garbled Locks for Bitcoin white paper is out and available, and it's got a lot of very interesting conversational topics. Obviously, privacy, scalability, network utilization. We're talking about Bitcoin, the OG. So to me, this is really exciting. And I think, if you're going to be a maxi about any of these coins, like it still makes sense to do Bitcoin because a lot of stuff is coming out. Now, snarks and ZK rollups, I've tried to talk about this a lot because I find them fascinating. Snarks being succinct, non-interactive arguments of knowledge. They're a cryptographic tool for verifying computation. They allow a prover to construct a succinct proof that they carry out some computation correctly. So in his example, he basically says, if I want to make a bet against my Bitcoin, a succinct proof could say, Graham owns 5 Bitcoin. I can do any sort of extensive computation to get there. I could leverage one Bitcoin, to 5x or something. But at the end of the day, the succinct part of this is that the statement comes out saying, Graham has 5 Bitcoin to commit to XYZ, a smart contract. Now, that's what's really cool is we can take all of this computation, all of these complex things that we're going to do. We're going into Aave. We're going into some sort of gambling app. We're hopping on the EVM, the SVM. We're doing whatever we want with our money. It doesn't matter how big or large or intensive that is. And it compacts it all down to one verifiable statement that is succinct. Graham holds 5 Bitcoin, because this is what we want to communicate to the Bitcoin network. And the idea being here that through a snark, we can have the Bitcoin network understand, yes, Graham has these 5 Bitcoin, and we are going to freeze those Bitcoin. That allows that sort of value to play in an alternative ecosystem, this Bitcoin layer 2, or whatever we want it to be. Maybe it's hyperliquid EVM, right? And And this proof can be verified by anyone without communicating to the prover much more efficiently than carrying out the computation. In the last decade, snarks have gone from mostly theoretical cryptographic construction to a practical, widely destroyed technology. So just like Succinct is doing with ZKP, ZK proofs, we have this opportunity to take an idea, basically communicate it in minimal information to the Bitcoin blockchain, and yet use it to go like buck wild in the ecosystems that we want. So this is a really fun idea. Now, the way we were able to do this, again, BitVM 1 was like, you can do it and it's permissionless, but it takes a lot of time, almost to the tune of what David goes out to say, nearly a year to prove that one of these proofs are actually valid. Then the second iteration comes out and it says, takes a lot less time, but if somebody wants to contest this, they may have to put up a stake of up to, let's say, 5 Bitcoin. So that gets to be quite expensive. And we do need people looking at these optimistic proofs. That's how they're rolling out. Optimistic means they're passing by optimistically. We are assuming that they're true with at least one body, and it could be centralized. It could be a number of centralized bodies looking at it to contend. Basically, if they find the proof has any sort of fault, they can say, so it allows for the speed to happen because we're optimistic that everything is indeed true, but we have the fault gap of basically anyone being able to call out bullshit. And if they do, they would earn some capital for that risk and that effort. And with Glocks, they're saying that, we can get faster, cheaper, more expansive. So with the magic of ChatGPT, I basically said, hey, make me a little graph of BitVM 1 versus BitVM 2 versus Groth 16, another iteration of a similar idea. And it broke up into a couple different ranking systems, right? Proof size, so how big that proof is. Remember, we have to pay for computation when we go on chain. So proof size, condensing it, making it more succinct, very good. A verification speed, computation model, trust setup, scalability, security assumptions. And we can see that they really do have their sort of strengths and weaknesses, with BitVM 1 being very high scoring on the trust setup, but, proof size, security assumptions, verification speed, not really hitting its marks. Of course, with BitVM 2, we're sitting kind of in the middle, being a solid average, and with Groth 16 leaning over to the right side of this graph. So that's pretty fun. Now, I did go back to ChatGPT and I said, hey, do me a favor, review this GLOCK white paper, and let's add some of the metrics to that as well. And what we can see is GLOCK coming in the red is very much like BitVM 2, which, if you recall, is rather expensive, and that's its major trade-off. So we do have a kind of expansive version of coming out. However, I looked at this and I was like, well, the costs aren't in here, and the costs seem to be the big trade-off feature happening with BitVM 2. So we reran this, and we now have cost coming in here. And with that, you see GLOCK really reaching out and kind of taking this beautiful average approach while minimizing the cost. So scoring much more highly on the cost. I believe it still relies on a potentially centralized fraud proof, the fraud proofs being somebody to actually pay attention to all of these zero knowledge proofs coming out and to call fraud whenever it happens. And they're comfortable with that. They say, hey, as long as it's like a majorly trusted business, as long as there's one person that we can basically rely on to look at this, but we do intend on launching 15, 25, 50, expanding the fraud proof providers. So as the cost goes down, obviously we can onboard more of those providers. We can minimize that trust by spreading it out farther. Anyway, this is all pretty exciting. It gets into some of the nerdy weeds. And if you want to learn a lot, I mean, Liam Egan, cryptographic master, really fun brain dump to get into some of the nitty gritty of what's going on. Of course, this David Soroy video, really, really simple and worth, 30 minutes of your time, or if you want to do 1.5, 2x speed, it goes pretty quickly. He does a great job, and it is exciting because if we can unlock this utility in Bitcoin, I mean, look, so much is being built in the virtual machine space that if we can just create a proof that basically says, hey, Ethereum, Graham has 5 Bitcoin, he wants to go in and fuck around, then I can take advantage of all of the updates going on. And this is all chain agnostic, let's recall, because it's just a succinct statement that yes, Graham has the money he says he's going to have. So we can go across chains. We might not even need those bridges if you just use proofs instead of a bridge. You can say, look, it lives on the Bitcoin chain. Graham has 5. And then he can go access and unlock all of that Ethereum fun. And the second that changes, the second that proof becomes false, that Graham no longer has 5 Bitcoin because he goes and spends it, well, then everything else shuts off and it is no longer verifiably correct. This is really exciting just to see what's going on, all of the growth around Bitcoin, because I do think when we look at the broader markets, Bitcoin being adopted as a monetary asset, as a store of value to Wall Street while they continue to look at Ethereum. But this could be that thing that just makes it all interoperable. And eventually we're going to throw an LLM layer on top of this. So we want this to be as smooth as possible for our agent buddies to just go and access and basically handle all of our funds on our own behalf. I mean, one of the most frustrating things to owning Bitcoin is the time value of money. Now, Bitcoin creates real value by simply number go up technology. And that's cool. But when you get to investments, when you get to long-term savings, you're like, I don't want my money to be stagnant, especially digital money, which should have a velocity to it. So the time value of money makes you want to earn yields. It's been a flaw to many a Bitcoiner because Bitcoin is in this unique kind of number go up phase, but there's always that desire to earn yield on your savings, to say, hey, look, I got my bag. Can I live off of it? That's really what yield permits someone to do, to generate recurring revenue and to basically say, now I can retire or I can grow a business without selling my savings. This is why the mortgages accepting Bitcoin as collateral is going to be so massive, because any homeowner can now retain their Bitcoin savings and maybe even outpace, right, the price of their house. You could put up a couple Bitcoin for collateral, and after a couple years, maybe you sell one Bitcoin and you pay off the entire fucking thing. So these are all really useful mechanics in wealth retention. And it's super exciting to see Bitcoin evolve because it is the OG chain, the mother coin, and hells yeah. So definitely go out there, give this video a watch. If you want to get into the nitty gritty, read the Garbled Locks for Bitcoin white paper. It's interesting at the very least, even if you understand only 25%, you will learn a lot. All of this is in the sources in my video description. So with that being said, don't lever up. We're in wonky territory. Even some of the better traders are a little bit scratching their heads as to what's going on. Stay safe out there, and I'll see you tomorrow.